Hey, it's Dan. Welcome back. You're watching iAllegedly. And I've got a good one for you today because we've got Bob Kudla back by popular demand. And also, um, Bob said, okay, you want me? You got to meet me on the hiking trail, Dan, and you could use a little exercise anyway. So, you know,
Yeah, no worries. Like I said, that's why we're standing there. I'm not letting Dan sit. We got to get some exercise
yeah,
today.
so we're gonna hit the trail. But don't forget to like the video. Don't forget to subscribe to the channel. And thank you for being here, first of all. And I want to give you an attaboy right away because when we met last month, you had said that you thought that the market was going to go down, and the market went down 11%, which was absolutely crazy. You absolutely called it. And I just think that we're in for, we said it was going to be a scary Halloween, and it was. I just think that we're in for a lot right now. So,
Yeah.
good job.
Oh, thank you. Volatility's gonna start picking up, so it's gonna be very interesting holiday season, and then next year is gonna be. You probably want to get your market will in order for 2024 because it's probably gonna be a long, slow drop in the markets.
Okay, what
Yeah.
brought this meeting today was, everything was going good. Nah, market's kind of up, and then yesterday Jerome Powell opens his mouth, and I said, Bob, come on, let's get together. I know how busy you are, but man, oh man, where do you think? What do you think he meant by that? Where do you think things are headed with him?
Yeah, I mean, not only Jerome Powell, there was a failed bond auction. So, even before Powell started to speak, the market started to roll over, and there's just no appetite for people taking on government debt 30 years out at the rates they are. They got to, excuse me, they got to push up higher, and the market doesn't like that because now you have competition for the stock market. If you think about it, you can get 90-day, 2-year money at 5% with basically no risk. You're going to get your money back in 2 years, and or the stock market that is now becoming increasingly volatile. So a lot of people, you're starting to see this slow migration out of stocks into bonds, and in fact, between now and the end of March, Janet Yellen has to refinance $1.6 trillion in government bonds, and that basically drains the reserve repo bucket that banks have as kind of like their that's their play toy, in terms of being able to speculate and keep them out of trouble. That'll be gone by the end of March, and then the world gets real.
Yeah, Stanley Druckenmiller stepped forward and said how furious he was that she didn't deal with this earlier. And she said, "Oh, he doesn't know what he's talking about. We're doing this. We're doing everything we can." And she's not, clearly. But one thing I want to point out to you guys is that follow this guy, okay? Look at the deal he set up for our channel. And you guys probably have Black Friday deals, right?
Yeah, we already set them up for you.
Okay,
So
great.
Black Friday specials.
danlovestrading.com. Go to danlovestrading.com and check it out. But Trade Genius is an absolutely amazing platform. Bob is, a trading legend, and it makes no difference whether the market goes up or goes down, but he has really got his hand on everything. But take a look at danlovestrading.com and follow Bob's advice, whether it's stocks, options, cryptos, everything. He's got his hands in everything right now. So, you know,
Yeah, no, it's a really good deal, guys, and we don't charge that much for the service, and we do a good job. You stay with us a long time, and that's what makes it worthwhile for me to do, and for you, it's profitable. And we got a really cool new indicator out. It's called the Trade Force. You get it automatically if you join Dan's service, but it's really simple to use. If it's showing a certain indicator that you can see it green, it's safe to buy. When it turns red, you should get out. And we just try to make these one decision indicators for our subscribers because people try to overcomplicate trading. It's really not that complicated. It's just that people envision things that just aren't there, or they get greedy, or they get fearful. And we created these indicators, first of all, for us, because we're looking fast at trades, and then we set alerts up, and this our algorithm just keeps us on the right
yeah,
side of
it
trades.
really is fantastic, you guys. Okay, you called it with Jerome Powell, and people were back and forth. He's going to raise interest rates. He's not going to raise interest rates, and then he didn't. And you called that. He said the Fed's done right now. But then yesterday, Jerome Powell steps forward and hello, it's like, we might, things aren't that good. And as we were walking up here, I mean, you were talking about, different scenarios and how, the economy is kind of stuck right now. So can you elaborate on that?
Yeah, I mean, Jerome Powell does not have to raise interest rates to maintain his hawkish or his restrictive positioning. He's just trying to talk the market in his direction without having to do anything. Janet Yellen pulled a fast one on him about 2 weeks ago, and that caused the market to do that quick 5% pop, is because she stopped borrowing money for 12 days and she went short, which means she was only borrowing money for 90 or 30 days. And that has a perverse way of putting liquidity into the markets that they speculate on. And Powell basically yesterday just pissed all over that and said that's not going to happen, and we're going to maintain restrictive environment. Look, they're still pulling money out of their balance sheets, and that's where the money comes from. People don't realize the market has nothing to do with cash flows anymore. It has nothing to do with technicals, nothing to do with fundamentals. It has everything to do with the money that's being pushed into and out of the banking system, and then that gets levered in the option markets. And the good thing is we could see it, not just me, but I mean people can see it. They can't do this and hide it. And so we're now going to be in a tide pushing out again. Mm-hmm. The good news is if you're long the market, you want to be long the market, we're going to probably get a Santa rally. I think they front ran it a little bit last week, but we'll probably have a little bit of a Santa rally this year. But come the end of January into next June, the market has everything going against it. The flows are against it. The macro environment's against it, and the political environment's against it.
Yeah, I was going to say, even with an election year, you think it's going to be down in that?
Yeah, actually, the election year, the year before the election year is really the best year. That was this year, and we're flat for the year. Okay. And so next year is not necessarily a positive year, especially when you have a split Congress. The House of Representatives is not going to give any money for Biden to be able to hand out goodies to to his constituents. So it's going to be a fight all year, and we just don't know, even geopolitically. Look, wars are good for the market if they're not on our shores, but you get something that pops here, then kind of all bets are off. And my positioning remains the same, Dan. And this is also seasonality will work in our favor too. So you were asking about different places to be. Is that energy still good for an election year? And this is against the S&P 500.
Okay.
Utilities are going to be a good bet.
Which is what we talked about. Because I have people that have written me and said, Dan, what do you think about utilities in the new year? Utility stocks, the dividends, and things like that.
All good.
All good.
Yeah, utilities, staples, energy, all good. That's the recession trade. That's the protection trade. And then people are getting out of what they call high beta, which is like been the tech stocks, and they're going to suffer. And even healthcare is going to actually underperform the market. But the market overall will underperform in 2024. So and there's some really great trades you could take. Those who trade with us, you can only really look out a couple weeks at a time, a month at a time at the most, because a lot of dynamics. But when certain things happen, other things happen, and that's what you trade. You look for these correlations, and you can make the trade. In fact, you could trade 4 or 5 things, and that's all you really need to trade. People try to boil the ocean, but you just trade 4 or 5 things, and you can make a lot of money.
Okay. Would you call this stagflation with the low demand, the high unemployment, and the high inflation? Is that where you think we're headed right now, or what do you want to call it?
Yeah, I always been calling it the inflationary depression, just because nominally prices are higher, but people's ability to pay for it is diminished. People call that stagflation. Mm-hmm. The unemployment rate will tick up. I mean, Jerome Powell wants unemployment, and it's happening. And what I'm fearful for is because of demographics. A lot of people are going to get laid off or are in their late 40s, 50s, and 60s, and people don't have any backup at all. And I have a friend who runs a mortgage bank, and he said they've created these programs now for 55 to 65-year-old. If you guys are in the business, you probably understand this, where they can get a low rate, but it's like it works equity against them, and then when they turn 62 and they can flip it into a reverse mortgage, they kind of true it up, through some sort of negative amortization because they have no cash. They may have equity in their house, and people are tapping all that out, and just to survive, we're over 1 trillion in credit card debt, which is insane.
Please, guys, ask these questions of these banks, because I was on the phone this morning before I drove up here to a foreclosure company talking about how things that they think are coming, and they think that the negative amortization loans are going to come out. And guys, New Century, all these places that went out of business, Wachovia, Washington Mutual, they had pick a payment, and people would, what human nature is to make the lowest payment and get yourself by. And if you make this payment and you're losing equity every month in that, it's the kiss of death. It's a lit fuse against your life. And the largest number of foreclosures that this company has is against the reverse mortgages. And people inherit these houses, the parents die, whatever the situation is, and they cannot refinance these houses. It's awful. So watch what you do when it comes to stuff like this.
Yeah, I mean, it's not just homes. I mean, the auto market is going to be in for a little bit of Armageddon. Right now, they're holding all these used cars off the market because the banks don't want to take a mark-to-market loss, but it's piling up, and going into next year is going to be a disaster.
Okay, when do the banks admit that they have that inventory for the cars? Because um, mid-sized banks have a lot of office buildings. The big problem is these credit unions have a ton of these auto loans right now, and it's bad. It really is. But they're not letting them all go to auction, and the auctions, the auto auctions that people are sending me, they're horrible. People have paid $20,000 over sticker price for cars, and then they try to send them to these auctions, and the auto dealers are just laughing and looking around, and back to the bank, back to the bank, back to the bank. But there are thousands of cars out there that are not on the market right now that are going back to the bank.
Yeah, a lot of them go through the auction 3 times and basically no bid. But the problem is that the auto dealers have a problem, and so do the banks, because these cars lose value. Because remember, they're sitting outside.
Yeah,
They're not in somebody's garage, and
absolutely.
the value of these cars are actually going to just plummet. I think the only car dealership out there, manufacturer, is Toyota, as a 30-day inventory. Everybody's 60, 90. I think Ford or somebody's like 120. EV is done. If you want to short a commodity, short lithium, because the batteries won't be sold because nobody's buying EV cars.
Really?
Yeah, it's EVs. It's not what people thought it was going to be. So that's a problem. And then just yesterday, FedEx told their pilots that contract pilots, that if you have other work, like regional airlines, um, sign up for their schedules, because we don't have enough work for you to move product in December.
Think about that, guys. Think about common shipping. This is the holiday season, guys. You're getting packages sent, business, year-end purchases. None of that's happening right now. I mean, everything points to a bleak Thanksgiving and very high prices for food, all the staples for Thanksgiving, and but business is off. UPS is off. The post office is off, and I was at a post office today and was talking to, do you need stamps? I said, no, not yet. He goes, we're just not selling them like we normally do. So this time of the year, he was referencing that. So
Yeah, I think there'll probably be a big sweep in people trying to do the end of the year when they do their books. You'll probably see the confession starting in February. You're going to see, basically a lot of retailers are going to be shutting down, stores, and so I'm expecting the banks to just package stuff up and take the big hit, if you will, and they'll all do it together, because then they can all say they did it together, and they like to flock together. So nobody wants to be first. That's why the banks got in trouble in the first place, is because nobody was willing to say, hey, he's raising interest rates, we better sell our 10-year bonds and buy 90-day bonds, because they would have had to write off a small loss. And now these guys are sitting on majorly underwater assets that they got to sit with for the next 8 or 10 years.
The unrealized losses for these banks it was $650 billion the other day from the big four. So, okay, let's talk about oil. Do you think oil is going to shoot up still? Do you think that we're going to see a demand for that, or does it depend on if the war gets expanded?
No, oil works in like these 60-day swings, and it got extended on a high side into September. Usually September, October is down. November, December, January is up. September stayed up, so now we have a little bit of October, November down. And inventories, even though they're showing like inventories are up this week, it was really inventories are low. And so we better hope that there's not a disruption in the world oil markets, because oil will go up $10, $15 in a heartbeat.
Okay.
So, but they may want to do it because you have to understand Iran and Russia, all the troublemakers out there need oil north of 90 to have excess budget, for their shenanigans. And now oil is trading down in between, depending on what you're looking at, between 75 and $80, Brent or North Sea, and they can't make any money there. And United States, believe it or not, is still the number one producer of oil in the world, and we're the number one exporter of liquefied natural gas. So not LNG, the shippers. I told you guys to get in the LNG shippers. I was in the one Dorian. You guys remember that LPG? I told you get into it, shop from 30 to 38. Okay, wow. And took profit there. I'm waiting for it to come back down, maybe 31, 32, and I'm going to do it again.
You were going to limit your Exxon holdings. Did you cut a little bit back, or
No.
did you keep it?
I kept it all, and I sell calls against it. My family's biggest position.
Okay.
So, we have a very large position in ExxonMobil. It's not going anywhere. They made a purchase. They're now the largest. They have the largest number of oil assets in the country, and so it's just going to keep on grinding. They raised their dividend, so we're quite happy with it.
Do you like the ETFs for like energy, for like PDBC, things like that? Do you ever follow things like that?
I don't. The ones I like though, I like pipelines. We own Williams Company. We own ET. That's WMB. We own ET. Both pay great dividends. Here's a great one that I don't know if I told you about it or not, but you should get it because it's going to pay an 87-cent dividend at the end of the month.
Wow.
It's called FLNG. It's a liquefied natural gas carrier, and they're just grinding out every day. They're keeping their rates. Asia, here's the deal. Asia and Europe have really high natural gas prices. The United States has very low natural gas prices. So it makes sense to freeze it, turn it into liquid and then ship it.
Okay.
And you can make a lot of money. So the shippers are making very, very good bank right now. Dorian LPG is a liquefied petroleum company, basically propane. And they're doing really well too.
One thing that just happened is Maersk, the largest shipping company in the world, just announced that they're laying off 10,000 people. And people are not shipping containers of product. Things like that are concerning. Things like the fact that our energy usage is down and we're not manufacturing anything is down. I mean, when I say anything, I get people that always send me, oh, we make this, we make that. Manufacturing's off, guys. The job claims yesterday were up surprisingly, which I always get a kick out of the word surprisingly. And so energy's there. Okay, like metals. Where do you think metals are going to go?
When Powell finally starts easing, metals are going to go through the roof. You saw what happened. They had that bump about a month ago because everybody thought he was done. That's not how it works. You got to watch the dollar. And so as soon as he shows that they're going to start QE again, then you'll see metals take off. Bitcoin kind of front ran a few things, primarily the ETFs that are coming out, and so Bitcoin keeps getting a bid because BlackRock's trying to build their asset base. So that's what that is. But stay away from the crypto miners right now. Crypto follows the central bank's assets. So some guy was waving at us here trying to distract us.
Yeah.
So cryptos are going to probably drip back
Cops
down.
on bikes. Okay. Don't forget to take a look at danlovestrading.com. Bob set up a great discount for you guys, and with Black Friday coming out, it's fantastic. It's always the best deal of the year, but his knowledge is second to none, guys. He's the go-to guy that we have on this channel. It's been over a year that he's been doing these videos for us, and you haven't been wrong on anything other than the politics stuff. But when it comes to stocks and everything, you've hit a home run on
Yeah, well,
everything.
if the Republican National Committee would get our act together, maybe I could be a little more
Okay,
confident.
okay, okay. But anyways, take a look at danlovestrading.com to get Bob's spin on that. So, okay, as far as the let's see, covered that. We covered that. You mentioned Bitcoin, and anything. Do you like physical metals yourself?
I don't.
You just stay away from them. Just
Yeah, I mean, my thing, and no hate mail, please. It's just
yeah.
my personal opinion is I don't want to get killed on the way to the grocery store with my gold.
Okay.
So I rather own the Bitcoin than gold because it's the transaction value of it, but I rather own the miners. Remember in the Great Depression, the only thing that went up in value were the gold miners.
Yes.
So, and I think that's going to be the same again. And
Okay.
this time we have Bitcoin to go with it.
Okay. Interesting. Okay. One thing that you've done in the past. So the EV stocks, lithium, you're not hot on right now. And but what about nuclear power and things like that? Are you up with that? Or are you
Yeah,
down with
no,
nuclear?
no. I mean, Quad U, and CCJ had some nice pops this week. Look, every country in the world is trying to become more and more energy independent because their monetary policies suck, and they can't import or export because nobody wants their currency. So nuclear is going to get a higher and higher bid, if you will, and CCJ and Quad U. There's also UEC, URG. There's a couple other ones out there too, but I trade primarily UUUU and CCJ. And the reason why I trade those are both in North America. So I'm a bit of a xenophobe when it comes to my commodity investing because I don't want to wake up one day and have the Mexican government, take First Majestic away from me as a silver
Okay.
miner. So I rather stay in the English speaking world for my commodities. For copper, it's FCX, okay,
Okay.
Freeport McMoran, and
Are you fine with Canada? Is Canada
yeah,
okay?
Canada's okay because
Okay.
worst comes to worst, we'll just invade them. So we have a Hecla miner for silver.
Okay.
I'm just kidding, my Canadian friends.
Okay. Okay. So you've given a few tidbits in the past as far as any dividend stocks, and the one at 87 cents is crazy.
Yeah,
Anything else that you're thinking on the horizon that's coming out?
no, I
Um,
love that one. So FLNG, you want to own it at this price is fine. If you want divvies, um, Dorian, I mean Dorian literally doubled in the last year. So and we bought it at 18, we sold it at 38. So it probably should come down some. And so if you can get it anywhere around $30, buy it, paying $1 dividend a quarter. Um, I like all the the drillers. Here's another shipper that is reporting this week, so you have to wait. TRMD, which pays really good dividends as well, and then other than that, the pipeline companies WMB, ET are 8%. And here's another one I have in my daughter's account. She's 22, and we're just letting this thing drip in for her, and she's just doing great. Is USAC, which makes the compression fits for natural gas wells in the United States.
awesome.
And just so you know, get her a brokerage account or him a brokerage account. My daughter's 22. She just went out on her own with a couple friends, and they flashed their Charles Schwab brokerage statements at the people to show them that they're financially stable. How many 22-year-olds do that? So get your kids financial education. Start them young. You don't have to put them in these crazy high beta stocks. Get them in these high drip divvies that do really well. And every 5 to 7 years, they're doubling their portfolio with less volatility. That's how my wife became very, very wealthy, is because they never sold their ExxonMobil for 25 years.
Wow.
So you guys gotta, and I love her more every day. So that's what you have to do. You have to just get these stocks and hold them, and you want to buy things people need.
You always joke with you about is Mom Kudla fine with you beating me, so thank you again and thank her for this too. Okay. What else? As far as um, real estate, we've talked about that you stay away from real estate. You said 6 years. Some of the experts have said as long as 10 years right now, and you're seeing things drop, drop, drop. And And
Yep.
guys, we're seeing the really high-end stuff that has got major price reductions, and you're starting to see these private lenders. If you go and you buy a house and you owe $2 million in that house, you don't go to Bank of America and fill out a regular loan application. It's usually through a private lender. These private lenders are stuck with, you know, billions of dollars worth of real estate right now that has gone bad, and they're starting to make deals on this stuff. You've got to do homework on this, but it's crazy right now what's out there.
Hey, look, WeWork just filed bankruptcy. They have 40 office towers in New York City that they're going to walk away from their leases on. So, commercial real estate is dead. I'm just waiting for the pin in that grenade to fall out, because that's really what's going to cause a lot of issues in the markets.
It's $1.4 trillion in the next 8 months that's due. And again, refinance 101. What's the property worth? What's your tenancy? Profits, everything you have on that. Oh, we have no vacancy. Oh, we're at 20% vacancy. We're not going to refinance that. That's why these hotels, that's why these buildings are being given back to the bank. It is absolutely catastrophic right now. So,
Yeah, and demographics are against you. So, I mean, who's going to buy the house? You know, you're, you know, in the past, we could buy our parents' homes, but now, a lot of my friends' parents are passing on and they have to sell the house,
yeah,
because
that
they can't afford to live in it because it's too expensive.
well, this
And
is the thing that, I get people are lazy, Bob, in general, in that they don't want to do the legwork and go and knock on doors. And if you want to live in a certain community, you want to live on the island, you want to live someplace really nice in a gated community, but you have this dream, and you know that there's people that are, in their high 80s that are living there, go knock on the door and introduce yourself, because odds are these people are not going to be able to go out and their children or grandchildren are not going to be able to pay for the house. I have a friend who, his family, there's 5 people that inherited a house, and it's in Monarch Beach. So it's literally 2 miles from where we're standing right now. Really, really high end. It's worth like $6 million. None of them can afford that house. So they're going to sell the house and deal with the taxes and all that fun stuff that
and
they got
those
to deal with.
taxes, that tax bill is going to be about $70,000,
Yeah.
because they repriced the home. That home, they probably bought that home for 1.5,
Oh,
and so now it's 6 million. Like my brother-in-law just went through the same thing. Had to write a $27,000 check for a home he never lived in, and then he flipped it and sold it. So, yeah, look, I know people, it's like a religion. I treat my stocks as a rental property. So I look at the stock and say, how much cash can I extract from this stock each and every week? So I sell options against my positions, and I look for dividends. And I do that with, we have large positions in TLT. I'm in and out of TBT, which is the opposite of the shorting of the bond market. And I'm selling against these positions all the time so I could generate cash. Either I buy more of the shares or we live off of it. And that's how I look at it. So, and nice thing about owning a stock, unlike a home, if you don't like the stock, you can sell it tomorrow.
yeah, exactly.
In a home, you can be stuck in it for some places for years. My mother-in-law, I told this story before. She was stuck in a REIT for 6 years before she get out. They gated her,
Wow.
and that's what we're going to see. Excuse me for coughing.
No, no, no. You're gonna see more of that too. Also, I do. People send this. I do step forward so I don't look short when I'm up
Oh,
against
there you
Bob.
go.
So, uh, but anyways, thank you so much for coming out today. It's always great. I mean, we could do this for hours, but we are lucky because the weather. It's cold, but the weather's good, and you're out here in your shirt, your t-shirt, and I'm in with my jacket on. But guys, please take a look at danlovestrading.com, and don't forget to hit the like button. Send your questions because I get them over to him. And the advantage to Bob's program is Trade Genius has been doing this for well over 8 years right now, and you can have access to Bob. There's different levels that you can get yourself into, and everybody that's purchased it has reached out to me and just said it was the most amazing thing that they've gotten involved with, and you get access to Bob. But we're in volatile times, and you need somebody that knows what they're doing. And again, I love this, that I can reach out and, what do you think about this? What do you think about that? And yesterday, guys, the market was just, oh wow, it's up a little bit. And then Jerome Powell spoke, and I'm like, wow, this is really, ridiculous because, you know, Brian Moynihan, the CEO of Bank of America, says, "Oh, we're going to have a soft landing. Everything's going to be great, and there's going to be no recession." And I'm like, who is he kidding? Who is he kidding? When I go to Bank of America and I talk to different people and they tell me that they're not getting full-time wages right now, they're getting cut back, their hours are getting cut back in the banks. All these problems that even the bank is having, the bank branches. I could go on for 2 hours. So
Yeah, I mean, Bank of America is in trouble in the sense that if interest rates keep going higher, the insurance to protect you know, they call it collateral debt security of those insurance products, they're going to be uninsurable. The prices are going to go too high. So we're really at an interesting point here where Powell's going to have to really walk a fine line between utter destruction and hyperinflation. So, and I'm not really sure where we're going to fall yet. I mean, it's really, we may get both, which is really scary.
utter destruction or hyperinflation. Maybe that'll be the title of this video. But final thing to leave you on is that our national debt is so out of control that yesterday I learned this, that for every hour, our debt is $218 million an hour, or $5.3 billion a day in our national debt. It's like if somebody ran their life, if you ran your credit cards that way, I'll just borrow more, I'll just borrow more. Eventually it stops. And I've had so many people write me these horrific letters lately about their credit lines getting cut. And the last time that this happened, guys, credit lines getting cut like this was right around the holidays. So you're going to see that again. '08, same thing. We're reliving history. '08, '09 holidays is when people face that. So
Well, and the layoffs are going to happen too because when you get to about middle to the end of November, these companies know, because I work for two Fortune 500 companies, they know whether or not they're going to hit the nut or not, and they'll start catapulting people right out of the business so they can show that they're being proactive,
yeah,
and then work the analysts down on the estimates. But you know, it's cruel, you know, because they're the ones that caused the issue in the first place. But be that as it may, it's going to come at a really bad time for people, and nobody has a cushion right now. So, you know, this recession is going to be an L recession because the jobs aren't going to snap back.
okay,
Right?
yeah, okay. Please, again, like the video, subscribe to the channel. Check out danlovestrading.com to get all of his Black Friday deals for Trade Genius. Thank you, sir, so much for taking the time. And this was easy. Meet me at the trail, okay? So I could have been worse, guys.
Yeah, and one last thing too, if you happen to just to go over to tradelikeagenius.com and you heard it here, let us know so I could give Dan you know, the credit and the discount. So you know, just tell us where you came from. We'd be happy to apply the discount to your you know, towards your account.
Also, they have a YouTube channel at Trade Genius where they do picks every day. You can check out Bob and you can his partner, and you can see them talk about the market on a daily basis if you'd like to do that as well. Okay. Onward and upward, guys. We will see you very soon. Thank you, sir.
Thank you
so much for being here.
Thanks everybody listening.
See you guys soon.